Are you hoarding cash in a savings account or worse under your mattress? If so, you may want to rethink that strategy. And in this video, I'm going to reveal 3 assets that are way better to holding on to your cash. And if you're new here, I'm Dr. Jeff Anzalone, simply on a mission to get you out of the rat race. The first step to take is by downloading the free passive income guide, links below this video. Now, we all know that the US dollar has been losing value over time. Every time you turn around, our government does what? Prints money. And they're handing it out to who? People that don't work. Unfortunately, this is what our country is turning into. Now, currently, I'm 50 years old, and I was born in 1974. If you're watching this video in 2024, you can probably do the math. Now, if you had a dollar back when I was born in 1974, today, that dollar would be worth, well, before I tell you, why don't you take a guess? I'll give you 3 choices. Okay. If you had a dollar back in 1974, today it'd be worth A, 70 cents, B, 40 cents, or C, 16 cents. What's your answer? Got it? Well, if you answered choice C, 16 cents, then you've won the prize. Yes, today, your dollar that you put away under your mattress back in 1974 would have lost 84% of its value. To put it another way, it means that you could buy for a dollar in 1974. So if you had a dollar in 1974, it now requires about $6.14 today to buy the same thing. Now, let's see how 3 assets that more than likely you're familiar with would have performed and why they're actually better choices. Number 1, if you've been watching any of my videos, you probably could have guessed number 1, and that is real estate. My number 1 investment, specifically real estate syndications. Now, if you're not really sure what real estate syndications are, I'll put a link below the video. You can check it out. I've done multiple videos on it. Now, if you'd invested that $1 into real estate back in 1974, it would be worth about $13 today, just from appreciation alone. But what's even more powerful is the income potential. So think about this. Now, if you had a property, okay, and you had rented out that property, your rental income would have grown to nearly $14 over the same period. You know what? That's the beauty of real estate. It not only goes up or appreciates over time, but it also is producing consistent cash flow. And now, unlike stocks, bonds, or gold, you can actually leverage real estate to generate passive income every month. Now, I started out listening to Dave Ramsey when I got out of dental school, who, if you know anything about Dave Ramsey, is 100% anti-debt. Any debt, including real estate. But once I started branching out and reading other books like Rich Dad, Poor Dad, and also The Wealthy Gardener, I then started to understand just how powerful leverage can be if you know what you're doing and, most importantly, you have a really good asset to invest in. Now, for me personally, it's 2 main things, RV parks and mobile home parks. But most people, when they get into real estate, they start off small with like single family homes. You know what? There's nothing wrong with that. It doesn't matter. Real estate is real estate, and it's a great hedge against inflation. Now, if you're still asking yourself, why does real estate really perform so well? It's really simple. The demand for housing keeps going what? It keeps going up, and supply is often limited, especially with mobile home parks. They just don't make them anymore. Look, it doesn't matter whether the economy is doing great or the economy is tanking. People always need a place to live. And this fundamental need keeps driving real estate prices up. Plus, you have other things like tax advantages like depreciation and mortgage interest deductions, which can really reduce your tax liability and boost your overall return. And I've got several videos you can check out on my channel about this subject. Now remember, if you leverage your investments wisely, like by using a mortgage to buy a property, your returns can actually go through the roof. Imagine using just a dollar as a down payment and then turning that into an appreciating asset worth many times more. Now, you don't get that kind of leverage with cash that you have just sitting in a savings account, or again, worse, under your mattress. So real estate isn't just about appreciation or going up in value. It's about cash flow, tax benefits, and leveraging other people's money to grow your wealth. And that is real estate. Moving on to number two, gold, but you also have other precious metals as well. But we'll just stick with gold, okay? Because this is one of the most popular ways that you can protect your money from losing value. Unlike real estate, which makes money through rent, gold, its main job is to basically hold its value, hold your cash's value over time. So if you had $1 worth of gold back in 1974, again, when I was born, today it would actually be worth about 11 bucks. Okay. Gold is often called a safe haven because it tends to keep its value or even go up when the economy is bad, when the stock market crashes or prices are rising quickly, like with inflation. Now, for hundreds of years, people have trusted gold because it's not tied to any specific country, government, or financial system. But why is gold just so reliable? It's just a piece of metal, right? Well, it's simple. You can't just make more of it like you can print more money, right? On the paper, cut down trees, make more money, print more money. Gold, on the other hand, is very rare, and this scarcity helps keep its value steady. People often buy gold when they start to get worried about other investments, especially during tough times. However, it's important to know that gold, sitting on your desk or at your house or in a bank or whatever, it doesn't create any income, right? It doesn't produce any money. You can't collect rents or earn dividends from gold like you can with real estate or stocks. Its value mainly depends on how much people are willing to pay for it. So you have to exchange it with other people, which can change based on the economy, based on what's going on in politics and the stock market. So while gold is great at protecting your money, it doesn't really grow your wealth by generating cash. Overall, though, gold is a solid choice for keeping your buying power safe, especially when the economy is uncertain. And which leads us to the third asset, last but not least, one that I know that you're very familiar with, and that is stock. Okay. Now, if you'd invested $1 in the S&P 500 back in 1974, it would be worth about $50 today. And here's the cool part. If you had reinvested the dividends, that dollar could have grown to over $150. Okay. Now, stocks, if you don't know anything about stocks let you own a piece of a business like Apple, Facebook, Google, Tesla, something like that. Now, as these companies grow and make money, typically their stock prices they usually go up, making your investment worth more. They're known for their potential to earn you big returns over time. Depends on what study you read, they average about 10% a year. Now, what makes stocks so great? First, there's a chance for your money to grow again as the company grows. Second, many stocks pay dividends, which those are like bonus cash payments that you get because you're a shareholder. Okay. Now, what you can do is you can take these dividends and you can reinvest them, which means you can actually buy more shares. And this starts to have a compounding effect, which again helps your investment grow even faster. And now, with cell phones and online trading, stocks are really easy to buy and sell. So if you get into a bind, you can actually get your money out very quickly. Plus, you can actually spread your investments out across multiple different companies, industries, and even countries, which helps you to lower or mitigate your risk. And don't forget, you can invest in stocks through things like your retirement accounts, IRAs, or 401ks that do what? They actually offer you tax advantages, allowing your money to grow tax-free or tax-deferred. Now, while stocks can be a little bit unpredictable in the short term, typically over the long term, they've consistently grown in value, again, making them a great option for building wealth through price appreciation, dividend income, and reinvestment. Now, we've gone over the three assets that, in my opinion, are better than cash. So what are the key takeaways here? Now, again, while the US dollar has lost a lot of its value over the years, assets like real estate, gold, and stocks have proven to be, as you know, much better investments. Real estate offers growth, steady cash flow, and tax benefits. Gold keeps your wealth safe through the tough times, and stocks give you long-term growth and income through dividends. Now, if you're still out there just sitting on cash, it might be time to rethink where your money is actually going. By investing in these three assets, you not only protect your wealth, but you also set yourself up to grow it over time. Now, a little bit earlier, we were talking about real estate. I mentioned that my favorite real estate investment was real estate syndications, especially RV parks. If you want to learn more about what I do with RV parks and how much money you could potentially make, do me a favor, check out this next video.